Welcome to the Real Estate and Wealth Podcast, your go-to resource for navigating the world of real estate investing and wealth creation. This podcast is brought to you by Calvert Home Mortgage Investment Corporation, your trusted, caring, and responsive short-term mortgage lender in Alberta and Ontario. We explore strategic and tactical solutions to elevate your real estate portfolio, drawing insights from seasoned Canadian investors and trusted advisors. In each episode, we dive into various aspects of real estate investing, including market trends, property analysis, financing strategies, risk management, and much more. Whether you're a seasoned real estate investor looking to expand your portfolio or a beginner taking those first steps, this podcast is for you.
All right, welcome to our latest episode of Real Estate and Wealth. Today we have a special guest, Dale Koeller, Chief Risk Officer and partner of Calvert Home Mortgage. He is going to be able to share with us his 20 plus years of underwriting, working with real estate investors, growing a mortgage portfolio, working with great employees. I've had the pleasure to work with Dale for 10 years, and I'm really excited for this episode and what we're going to be able to share with our audience. Dale, I'm sure you could do a better job at introducing yourself than I.
All right. Well, thanks very much. I'm really excited to be here because I love this business. I have a massive passion for this business. I've been here for 22 years, but I guess I was raised by my father who started Calvert. So maybe I've been here a little bit longer, but I never believed that I would be a Calvert employee when I was a kid. I never thought that I was going to get into this business on the coattails of my father or my brother who joined Calvert before I did. So to introduce myself a little bit and how I ended up at Calvert, maybe if I could just tell you a little bit of that story.
Please do.
My brother joined Calvert after he finished his university degree, and I finished my degree a couple of years later. And my dad and my brother, so they told me later, sat down and said, I asked one son to join. Should I ask the other son? I want to be fair and that sort of thing. And so they agreed they would come and see if I had any interest. And I said no. Which was my honest answer. But we did talk about it openly. And what do you think? And I still said no for quite a while. But maybe I was young and vulnerable and tough time finding a job, to be frank.
They took advantage of you.
And I thought, you know what? I should just give this a try and see what I like about it. And I had no expectations of ending with a passion for this business. And I truly have a massive passion for this business. And I have to fast forward a little bit in my career to tell you that story because I really got a passion for this business because somebody was kind enough to send me a thank you card, and it changed my whole life. It changed my perspective of this business. It changed my perspective of what kind of gifts people can really give you in really simple ways. And the thank you card was one from one of our real estate investors. I'd done maybe 7 or 8 deals with him. And he just sent me a thank you card and said, "You are helping me achieve my goals. You have no idea how valuable that is to me. I am growing a portfolio and I couldn't do it without your hard work and your service." And the light bulb went on. I thought I was at work doing transactions. I thought I was at work just, analyzing real estate, writing up a loan, as long as X fits in this box, I can do this. And what Michael taught me, my friend, taught me was that I was actually helping people. And not only that, I was helping him achieve a massive goal near and dear to his heart. And he built a massive portfolio, not just with our help, but with lots of other people's help. And he became a massive mentor in the real estate industry as well. He was an absolute pleasure to know. He passed away a couple of years ago from cancer, just a massive loss to our community. But I always carry him really close to my heart because he saved my career at Calvert. And what I thank him the most for is teaching me that there's people behind these loans. There's people behind these goals and this interest to invest in real estate, or even just solve their real estate problems or their debt problems. And so that's where it all clinched for me.
That's so cool. Thanks for sharing. So looking back, we're celebrating at Calvert our 50th year in business. this year, and you've been part of it for 22. So you came into a business that was 28 years old. And what I think is super cool is how long we've been serving real estate investors.
Mhm.
So, while the real estate investor industry in Canada is, I think, still in its infancy and growing, how did that come along? Like how did your father Everett see this opportunity to serve people, to serve entrepreneurs, to serve really Canadian real estate?
Yeah. It's an amazing question because Calvert Home Mortgage ended up doing mortgages with real estate investors quite by accident. Everett was just out there doing business, trying to find angles that would help him get a foothold in the market. And he had this borrower come to him and say, the banks don't like me. I'm not borrowing for very long. I just need to borrow for a short period of time. Got a solution. He's like, let me figure it out. So he turned the yarn ball around a few times to try and figure out how he could pull on a string. And he figured out a way that he could help this guy. And I mean, opportunity is always met with being prepared. And one thing that Everett was prepared. He took a bunch of appraising courses before he started Calvert Home Mortgage. So he had a really good understanding of what underlies the value of properties. So when this guy came to him and said, I need some short-term money, here's what I'm doing. I'm fixing up houses. I'm going to resell them. I'm going to invest 10, but I'm going to make $20,000. And my dad said, yeah, I can see how that works. Like I can see how you're, improve the quality of the property and you're making something equal more than the value that you bought it at and invested in. And the rest is history. We did business with that gentleman who came to my dad for 25 years, I figure. And I have a spreadsheet still of all the deals he did. It was incredible how many deals he taught us. And actually, I would say that every single client who's done business with Calvert since then has always taught me more than I've ever taught any single one of them. We are really blessed to learn from our people that do business with us, understand what their ideas are, how they're going to solve different real estate problems to improve their investments. And I'm only here because we're standing on the shoulders of giants who taught us and walked through these dirty houses themselves or these interesting opportunities themselves. And I've got some great stories to share if you want to hear some, because, man, we've seen some doozies over the years, but we've just learned from doing it, just learned from attacking different problems, hearing what the solutions might be and trying to make it work. And we figured out, obviously, 50 years later, on some pretty reliable systems to help people.
Amazing. Are there any stories when you first started out that your dad taught you, just in general, either about life or business, that you're able to share?
Absolutely. The one that really comes to mind in terms of working at Calvert, he had one big rule: I'll sleep on it and I'll give you the answer in the morning. And that really taught me some amazing discipline. Like I was this hungry young gent, particularly when I was young, saying, you gotta give me more. Like, help me understand why you're making the decision that way. What are you doing? And he'd just say, just let me sleep on it. And he'd kind of push me away a little bit. And I realized what he's doing years later. He's giving me space to figure it out myself too, but he's also figuring it out too. He didn't have all the answers. And I love mentors and teachers who don't just teach you all the answers and give you all the sound bites at the end. They give you opportunities to figure it out yourselves. So that him saying, I'll tell you in the morning, I'll figure it out, was a really good piece of lesson. The other lesson, kind of just more Calvert lesson than anything, but his rule of lending was, see the eyeballs of the person that wants the money and go kick the dirt against the property that they want security on. And it was much more intimate than that, really. Like, understand who you're doing business with, get to know them. Don't just look at the paperwork. Look at the person behind it. Figure out if you can trust them. Figure out if you can do business. Figure out if you can have tough conversations with them, because you might have to one day. And kicking the dirt and understanding it, what makes it tick. Why do people pay for a property? Why do certain attributes downgrade a property value versus improve it? And figuring out why people live there and how it's a home to a lot of people, not just a property, not just four walls, some windows.
It's really cool. Yeah, and I think it's important to say that that mentality and philosophy still lives in our company today as it relates to relationships. While we don't see our clients as much eyeball to eyeball, we absolutely work with them over the phone, maybe eyeball to eyeball through technology. But certainly that approach to relationships and to working with our clients, brokers, and borrowers absolutely lives and thrives today. So
Yeah. I'm so glad it does because so many people at Calvert have embraced that value. And like Dev and I talk about it all the time too. He's so impressed at it. He keeps saying, he's mostly retired now. He's our chairman at Calvert, but he's out in the world as a general person. He says he gets frustrated. I can't get my banker on the phone. I can't go and make a financial decision. He knows what decisions he wants. He knows what services he wants, but he can't get people directly to interact with. And so we've always, used technology, use the systems you've got to leverage yourself, but don't let it ever replace that relationship. I think what's made us successful and what's helped us make our borrowers successful over the years is letting them just tell us their real problem. Let them just talk through what's bugging them. What are they trying to achieve? And one good thing about us not having products for the first 10 years that I worked at Calvert is that we had to make it all up. And we had to understand what people's needs were before we could cater something to address it. And that made us a nimble company. That made us a group that was really interested in learning and listening. And I think we've got a good suite of products that do that now, based on those good lessons. But I just always want our people to listen to people, listen to the person in front of you, and what's bugging you, or what do you need, and let's just figure out if we can do it, even if you don't think it's in the realm of possibilities.
Mm-hmm. Mm-hmm. And again, I think that's another legacy piece that lives today. Like, while we are a different company, while we are a little bit less nimble, I'll call it, both intentionally and non, that we are still extremely interested in listening to the market, listening to our brokers, listening to our borrowers, and understanding where they are underserved to see if there's an opportunity that we can solve for them. So that's another really, I love the story. I love the approach, and I'm really glad to work with a company that still lives that.
Is there a story behind the name Calvert?
Oh, well, there's several stories behind the name Calvert. So I'll tell two of them. So number one, Everett had two partners starting Calvert, two brothers, in fact, who said, come to Calgary. We'll put up the money. Everett, you're a good worker. You put up the labor, and we'll start a company that's a mortgage company. And back in the day, everyone knew CMHC, the Canada Mortgage and Housing Corporation, was where you would get government level information, non-biased information about mortgages in the market. So they figured they wanted to be in the phone book at an acronym really close to CMHC. So they became CHMC. So the first problem was, what's the first C going to come up with? So they had Home Mortgage Corporation. That was easy. But what was this first word going to be? And so Lee phoned my dad one night and said, here's your choices. You could be Calgary Home Corporation, Home Mortgage Corporation, or you could be Calvert Home Mortgage Corporation. And I think he had one other that I can't quite remember. And Ev didn't want to limit it to Calgary on its own, so he chose Calvert. But knowing Lee, we're pretty sure that name came off a whiskey bottle. Lee really enjoyed his whiskey. And Calvert was an old whiskey back 50 years ago, available on most shelves. You can still find it once in a while in the States. My dad and I have enjoyed a glass of Calvert together before. But yeah, we think the name just came off a whiskey bottle at the time. But the purpose behind it was to start with a C.
Get in that phone book.
To get on the phone book.
SEO before SEO was a thing back then.
Yes. Yeah, the phone book, the yellow pages where you wanted to be. And there would have only been a list of a couple dozen of mortgage companies. So put it pretty close to the top of the list, and CHMC.
That's so cool. That's so cool. So the next piece is around your expertise, Calvert, in our business, which is true with any business, is continuously having to work within regulatory policy for our real estate investors. They know all too well municipal restrictions, provincial restrictions, and legislation. And the way that we operate is by absolutely adhering to those rules and benefiting from them with a make sense approach to business. And Dale is in charge of a lot of that for the company. When new policy legislation gets rolled out for the company, which is all too frequent, we have to adapt. And I think you could really help our listeners, particularly real estate investors and mortgage brokers, because they're going through it all the time too. With kind of your approach to that, and maybe a story or two on how you've navigated those hurdles. Because when they do come out, a lot of time the gut reaction is to see them as, oh my gosh, these are just going to prohibit me from doing what I want to do.
Yeah, that's totally right. Actually, this is an area that Everett really taught me how to prove your own value when the landscape changes and you've got to deal with new regulations. And it went against everything in my gut to do what he does. He was at a Securities Commission meeting once, and they were rolling out new commission rules that would have required Calvert to become a registered entity under the Securities Commission. And the whole room was upset and arguing and trying to discourage a decision that had already been made. The train was on the tracks. It had left the station, and the whole room was railing against these new regulations. And Everett stood up at the front of the room and said, "How do I get registered? And like, how do I embrace these rules? How do I get in line with them right now?" And the securities regulators actually stood back. They're like, "Well, we're not ready. We can't do that for you right now." But so he was way ahead of his time. In other words, in that. And the real lesson for me is that if you run towards it and try and figure it out, it takes all the fear away, all the power it has over you. Just move ahead, figure it out. And it's terribly hard to do that. Like, this is not really simple. But to tell the rest of that story, Everett and Dean were the first to register under that regulation. We built a policy book because we went in, read the legislation or the national instruments directly, understood them well. We developed a policy book to manage that. And then they actually made it a moneymaker, and they sold the policy book to a bunch of other competitors because A, it was the right thing to do, B, because people really didn't understand it very well. And C, they wanted to just recover some of the costs of investing that time and effort into becoming knowledgeable about the regulations. And frankly, regulations, we can maybe discuss or complain a little bit about how some regulators go about creating new regulations, but really at their core, they're trying to protect people. They're trying to understand and regulate the market, give everyone a fair shot. And you could disagree that sometimes it's in fairness, but at Calvert, we have become experts at following the legislation, understanding it well enough to be able to follow it well. And that's served us really, really well. It really matches with our ethics, really matches with our modus operandi to just be good operators in business. And as a result, people come to us when they have a tough time figuring it out. In fact, that was how Jesse and I first really met and worked together. Mm-hmm. Jesse was working at a different company than Calvert, and we got on an industry committee to help figure out what the next set of those same regulations I was just talking about would be like. And we helped develop a white paper together, and I like working with this guy. And all of a sudden, here we are 10 years later. So messy regulations sometimes bring us the best people too.
Yeah. I love your altruistic approach to it. Sometimes I view regulations as bureaucrats just looking to build bureaucracy and sometimes not seeing the forest for the trees. But
and I would love to tell you a story about that because that can totally be the case sometimes. Maybe 13 years ago, we had a major change in the Harper government was in place at the time, and the Department of Finance put out a new regulation that really saw a massive penalty to my family on their RSP ownership as it related to Calvert, but it affected a lot of my cousins, my aunts and uncles, and a whole bunch of dear shareholders of ours that basically made our investment in our company prohibited for our registered accounts. And the draft legislation, when it came out that year, actually said, if this is still in your account in 2 years after this regulation comes into place, we're going to confiscate the whole investment, which was, I can't believe the Canadian government used the word confiscate in their draft legislation. So anyway, we went to work. Everett led the charge. I was kind of at the back of the office, not quite understanding just how impactful this whole idea was. But we started having meetings about it, figuring it out. And pretty soon we did what we normally do, is just dig in and try and figure it out even better. We rallied the whole group of mortgage investment corporations in the country together. We formed kind of a working group. And maybe lucky or unlucky, I speak a little bit of Francais. And my dad said, if we ever have to go in front of the Standing Committee on Finance at Parliament, we think we should send the French speaker. So I got nominated among my family to go, and I just love the opportunity. I was extremely nervous. It's extremely nerve-wracking to be in front of parliamentarians doing this kind of business, but it taught me so much about how policymakers work, how the bureaucratic system works, and we managed to have a significant amount of influence through that process. And I'll say that it wasn't just because we were willing to go to speak in a committee on finance. We went first to the Committee on Finance at Parliament, then we went to the Committee on Finance, the Senate Committee on Finance. And those were really important meetings, but where the really, really important meetings occurred was directly with the heads of the directorates for finance. And we had amazing open conversations, and they were really open to listening and understanding how it impacted, because, I really don't envy policymakers making rules for an entire country and not knowing how they might impact one simple individual, one use case, one system. So it was actually, looking back on it, a real privilege to be able to entertain working with parliamentarians and the people in Finance Canada to try and figure out if there was a better way. And actually, originally I felt like the whole thing was a loss for me. I didn't feel like we won anything, but upon reflection, we really did win a lot. They kept most of the rule in place, but they removed the part about confiscation of somebody's assets, which was a massive win for us. And so I'm still tax affected, but I think we softened that legislation quite dramatically in the end.
What was the original goal of the policy that they were trying to?
It gets really complicated, but somebody had basically figured out a great way of inappropriate tax evasion, and using the rules to their advantage. We think they basically stuffed their dental practice into what would have been an RSP eligible vehicle, which a mortgage investment corporation is, and so the government was just trying to make sure that people didn't get away from being massive owners in their own company and putting it in their RSP to hide massive capital gains. So the intent of the legislation was actually, as a taxpayer, I say that's pretty good. If you're helping insured close loopholes that people pay their fair share of taxes, I by and large agree with that. It was that they crafted the legislation in such a way that it caught a lot of people who, in my opinion, shouldn't have been caught by that rule.
Those unintended consequences.
Those unintended consequences. They're big.
I always appreciate the level of detail that you're able to provide in working with you. Working on a project that big, do you have any systems, processes, methodologies of how you tackle such a massive project like that?
Mm-hmm.
That I think listeners would be able to find valuable either in their working life or just you're trying to tackle a massive problem. How do you go about filtering the data, the information, your case in order to be successful for the specific outcome that you're looking for?
That's an awesome question, Ryan. And I appreciate that. I very much am a detailed person.
Yeah.
And sometimes I feel like that's my superpower. And other times I feel like that's my Achilles heel, right? It's what slows me down. And I'd love to answer the question a little bit in terms of my partnership with other people, because what makes me great doesn't make everybody great, and everybody approaches problems differently and brings their own flavor to it. And where I've really been blessed is surrounding myself with other people who aren't as detailed as I am. My brother and I really had a difficult time in business when we started our partnership, because we saw a lot of our differences as areas of tension. And what we can say for sure 5 years later, but definitely 22 years later, is that different approach to problems and systems. There's something that he brings that is absolutely amazing, which is being a high level thinker, somebody who can think strategically. He can step away from the details and see the forest through the trees, and help make really good, fast decisions. And I am just not built that way. What I'm built for is digging into every single detail, reading that tax legislation, which is so hard, reading those regulations from source, parsing out the nuanced differences. That's what I need to do to understand it. Or maybe even more granularly in terms of what I think made me a great mortgage underwriter is I didn't take any rule for granted. We didn't really have a lot of great rules at Calvert when we started. Everett had rules that he could tell me about, but he'd never written them down. So we had to make it up as we went along. And what made me great, I think, is he gave me a lot of space to just go in and figure it out. What is the risk behind this metric? What is the benefit of that real estate being a certain way? And so my ability to dig into those details and figure it out and turn it around, flip that Rubik's Cube a few extra times, has helped me get into better insights that are longer lasting rules for me in my career. So I can't get to conclusions unless I really dig in deep. I don't think everyone's built that way. I think lots of people are built that they can come to conclusions with doing way less detailed analysis and reading than I do. But I just need to interact with it on that level of detail to really understand it and grow my confidence about it. I'm getting a little bit better at reading a little less into the detail and making gut decisions, but that comes with time. And I think what I needed to really do, especially early in my career, was just not be afraid of it. Just get into the details, turn it around. Yeah, it had me working late lots of nights to figure it out so that I could still manage that one sleep rule of giving an answer in the morning. Mm-hmm. But it served me really well in my career. And I think really that's where, Jesse, you've been a really great balance in my career, in that you've got an ability to approach details in a different way than I do that allows you to be more powerful at the higher level and strategic level than where I'm at in my detail level.
Yeah, I love that answer. And I think it's so important to embrace your superpower and work with partners who see that, right? Like it sometimes does create friction, but with those trusted relationships and knowing that you're working with people, and this is whether it be real estate investors, brokers, colleagues, that you're still looking for the best possible outcome, and how you get there may differ, but the beauty of it can be in those different approaches to thinking.
Absolutely. And I think, that's really good advice, especially for people who are lone wolves. And that's one thing I loved about being an underwriter and working with real estate investors all the time, is that they are often in a position where they can't talk to other experts in real estate because they're competitors, or they feel they're competitors. I don't think that's always the case, but being a sounding board to those people has been a real privilege in my career. I think that's really how I've learned so much. And so I really encourage people to do that. Like, get out and talk to people, learn different things, ask people's advice, check out their point of view and their opinions, especially for those who work relatively solitarily. And real estate investors tend to.
Yeah, they do. And as you talk through that, I even the broker community that comes to mind, that we source the bulk of our deals from them. They are still, while they're in a community, they're in a brokerage, they're still, for the most part, one-off entrepreneurs. And to understand and to work with and really build trust and in turn education jointly is so impactful to us as a company, as individuals, and hopefully that impact is seen in our clients as well.
Yep.
I think this is a good segue into risk, which Dale's formal title is Chief Risk Officer, which I don't think does it justice, because really Dale's role is more portfolio ownership management, looking at what mortgages we want on our books, and those mortgages can be property types, they can be geographies, they could be per seconds, they could be different leverage, and in balancing that and balancing that through the good times is easier than the bad times. So I'd like for you to give us kind of your view of that risk management piece, and maybe some stories of really how you and Calvert have managed through not so great times.
Yeah, great question. I think it was my insurance broker who taught me this line: risk is what's left over after you think you've thought of everything. And I really have embraced that statement. I think I'm in the risk business, not in eliminating risk, but figuring out how to take it and take it smartly. Shareholders sometimes ask us, isn't that risky? Isn't that business a little bit extra risky? And I think if you understand what risk you're taking, then you can understand how to manage it appropriately. And I think investing in real estate is the exact same way, by the way. I think understanding your risk, what can go wrong, if you get 80% of it right, 90% of it right, that's mostly going to go right. Life circumstances and other things that you don't foresee happening can go wrong for sure. But if you can anticipate and understand the biggest pieces of the risk, what are the biggest rocks, it all makes a lot of sense. So I think your question a little bit was, how do we manage risk and how do we identify it? And
yeah, I liked, you got into I'll say yours and in turn our philosophy of risk, which is embracing. But the only way to embrace it is by looking at and understanding what the potential risks are, and then being ready for the unknown and making decisions
and being ready to take advantage on the upside as well.
Yeah.
So I love you've got some books here on your arm, one by Warren Buffett, and I see another one here with Charlie Munger. I got to tell you a Warren Buffett, Charlie Munger story, because it really relates a lot to me. Charlie Munger is Warren Buffett's right-hand guy. And there's this story they have of Warren Buffett phoning Charlie and saying, I want to pitch you this deal I'm working on. Get your thoughts on it. And Charlie says, well, this could go wrong. Watch this. This could go wrong. I think you better figure out this problem. This is a real problem. This might go wrong. And, the whole conversation was about risk that he had to watch for. And at the end of the conversation, Warren says, I think I'm going to do this deal anyway. And Charlie says, yep, I think so too. Put me in for some. And that's what I think the right approach to risk is. In other words, you can beat it up and understand it. And what you're left with at the end of the day, that understanding either can tell you whether you should be okay with it or not okay with it. Charlie might say, I'm not okay with it sometimes too, for sure. But can you beat up the problem and the risk and understand the investment on its own, and enough to know whether you're taking the appropriate level of risk or an inappropriate level of risk? It's really just probabilities, right? And managing it. And really, we're just so blessed in this industry. You can insure a lot of risk you take. You can manage risk with knowledge, really understanding your investment and how it moves. I think that's the attraction most real estate investors have to real estate. Like, I want to touch what I'm working on. I want to see how people live here. I can get my head around how I'm creating a home for somebody. I can get my head around why the kitchen should be set up a certain way, why it'll sell quick if there's new appliances in here. And I think it's that approachability to real estate and understanding the risks and value of real estate that make it such an attractive investment type.
And to that, it's the understanding is digestible because there's so much information and data out there, and you can build your best case scenarios. You can build your off ramps,
Yep.
Right. If you have, shoot, I'm 50% where I thought I was, but there is still an off ramp. There is still for the most part, live to fight another day type deal when faced with challenging times or unforeseen risks.
Yeah. And actually, you asked about it earlier in terms of economic downturns. There's nothing that matured me more as a mortgage lender than a really bad economic downturn. And thank goodness I was an underwriter for maybe 4 or 5 years before we had a really bad downturn. So, I got to get good at, or think I got good at writing loans. And then I had to collect on loans that I didn't write so well. And nothing matured me more than that. That was a lot of life lessons learned very quickly. But it's Everett's philosophy on Calvert Home Mortgage and what we invest in. And it's really related a lot to what we talk to about our real estate investors, is to buy properties that are the average or below average type of homes. Everett's risk appetite for lending against those properties was, even in really down times, it's a good off ramp. People need houses over their heads. They don't necessarily need mansions. So, lending at the high end of the market or flipping on the high end of the market when an economic downturn comes, maybe people don't need that mansion, but they absolutely do need that common average home over their head. And so if you're investing in those kinds of areas, you've got way more off ramps in tough economic times. And Everett certainly had to manage through some downward economic times that he learned a lot of that risk appetite from. So we try and impart that onto our real estate investor clients anytime we can, about understanding the real estate that you've got and the ultimate value that underlies it, which is a home for the common person.
Yeah, I think that's so important. Our portfolio composition with a mentality like that can insulate us somewhat in a downturn where there's less price compression in that mid to lower end of the market than there is the higher end. At a certain point, they'll catch a bid as opposed to the higher end, which I know has come through working through various downturns and all that great experience and knowledge and information gathered by working in this business for 50 years for Ev, 22 for yourself, and 25 and change for your brother. So I think that's a really important story for us as a company to continue to remember, and also our real estate investors and even our brokers, right? Like we our brokers and borrowers, from time to time we see people buying homes that we worry that is that the best decision for you? And I know it's not our responsibility to bring that up, but it is our responsibility to at least ask questions and understand what that plan is.
Absolutely. Yeah. Our values are all about helping people leverage to their better success. And, like even the name of this podcast, we want to help people achieve their success and wealth in real estate. And so any ideas that we can give, or red flags that we can wave, or big green flags, go. This is a good deal.
Right.
Go, keep investing.
Go fast.
Go fast.
Yeah.
Were there any policies or procedures you implemented after the first downturn based off of the learning lessons of
what were some of the hard lessons?
Of what happened? Yeah.
Let me think if I can think of a good story. Hard lessons. One of those ideas that Everett had about looking in the eyes of the people that you're lending to and developing a little bit of a relationship with them. I think post downturn and during downturn, I realized that the value of that relationship was really, really important. I don't love to talk about the enforcement piece of our business because it maybe doesn't sound so awesome, but there is a story I really feel like telling that led me to double down on the idea that we really need to have relationships with the people that we work with. I lent this money to this family, husband and wife. His mother lived with them. She had dementia, so they were caretakers, splitting their some difficult home care kind of issues with their parents, and the money was just really tight. I helped them get out of some higher cost debt into some lower cost debt with Calvert's loan, but still months on later, it just wasn't going well, and so it was my job to collect on the loan but I didn't feel like it needed a hard touch. I felt like it needed, these people had a really good mortgage. They had a really good house, really good asset. It needed a little bit of work to really sell well. But they didn't want to live in that home anymore. It was too much home for them. And through all of this too, the mother ended up passing away. So, which is really tough, hard life circumstance, but also freed them to not be as attached to the real estate they had. Anyway, I held this woman's hand for months. Talked every 3 weeks together on the phone. How's she doing on her plan? Did she fix the things that she needed to in order to get this place ready for sale? I introduced her to a great realtor, somebody I would use my absolute self as a trusted advisor, and they worked together for months, and they successfully sold her home. I got a call from her about a week after it closed, and I thought that she was going to go berserk on me, right? Just because she'd been through such a hard time.
You're right.
She thanked me profusely. She said, I want to thank you for what you did. I know you worked hard to help me out. And I said, you don't have to thank me. I was brushing it off. It's just what we do. And she said, no, Dale, I know how others have been treated in this kind of situation. And I know that you did something a lot different to not treat me poorly, to treat me like a human, and help her with her off ramps. I think what we did differently there, just help her understand her questions, get answers, figure out a plan B. And that's why the one thing I love about real estate is there's lots of plan Bs, selling your home, restructuring the debt. There's different options and conclusions there, and people need homes. So that home can be sold. It might not be the right home for you, but it's the right home for somebody. And maybe you got to downsize. Maybe you got to rent for a while, but there's good options there. So I was really happy I could help this woman. It's not easy, but it was really important for her to protect as much of her assets as possible and recoup the most amount of money of her hard-earned money that she needed in life by protecting it. And that was the right decision.
Great story. It seems like a common theme is truly caring from the thank you card story. This story,
Yeah.
I can definitely say it lives throughout our values, throughout the company, is genuinely caring for others and having that relationship and doing what's in the best interest of the client is significantly obviously helped being around for 50 years and many more years.
I'd love to tell a story on the positive side though of how we've really helped some amazing real estate investors. I was saying how I love sharing stories where our clients teach us something. And I got to tell a story about this young guy who came to me about, I'd say 12 or 13 years ago. I figure he was about 25 at the time. His parents had helped him get a bit of a nest egg together to invest in real estate. And he came to me with the most interesting idea to increase value of a property that I've ever come across in my career, I think. He bought a...
Right now, all the real estate investors are trying to... So I wanted to create a bit of a cliffhanger here.
Well, this was a really good one, and I've only seen one person doing it. I really wish he'd have done it more often. So he bought a 2-story apartment building right across the street from one of the Grant MacEwan campuses in Edmonton.
Okay, so student housing type of asset?
It could be, but a lot of the units were two bedrooms, so mostly families.
Yeah.
Had amazing amount of parking. That was a real good attribute. But what this young, amazing man figured out was that the structure was built strong enough to support another story. So he came to me and said, would you help me build a 3rd story on this building? So he increased, he didn't quite get another 30% units because he had to account for some stairwell increase and so on and more laundry. But he basically tripled the size or increased the size by 1/3 of the units in the building, increased the net income massively on this building. And it probably only took him, I want to say maybe 5 months to do. It was a truly unique idea. And that's the magic of unlocking, 1 + 1 = 3 or 5 or 10. And it just doesn't make mathematical sense how you can invest in a property and earn way more than that in return for it. but it was a standout deal in my head because it was so creative in the way he approached. In this case, it wasn't a problem; it was a total opportunity. And I don't know if maybe it was a unique building, but he believed that there was lots of these buildings built well enough to support other units. I think his dad was an engineer, so I think his dad had some good places. He had a good line of sight, but yeah, that was a story that blew me away.
Well, Ryan's going to get his information reach out right after this podcast to see if there's any more of those around. But to that point, like that is a trend we're seeing from policymakers to the better, where they're reducing red tape, where, you got CMHC supporting the financing for this on the exit. So we as a company are hopeful, and I know the real estate investment industry is hopeful, that this additional dwelling unit ADU phenomenon, where we're trying to increase density within current urban areas, is an opportunity that will continue to grow. So I think that's an excellent case study for our listeners.
100%, totally agree. I know we have a bunch of case studies that we're publishing, not so much specifically on that, but it'll be just success stories of us helping clients adding suites or what is it? Anything we didn't touch on?
I got one question, but if you have any in mind, Ryan, before I do a wrap-up question with Dale.
Well, I know we've talked a lot about in the past. I'm interested in the future. Like, where do you see Calvert 10, 20 years from now?
Yeah, that was going to be my question. Like, thinking through, like, Dale's 22 years. I only have 10, but where we've gone in Dale's 22 and my 10, the business is growing substantially. I know you've seen it in your time here.
Yeah.
Like, thinking about the industry, thinking about the business, thinking about the climate in which we do business. Where do you see us in 5-10 years?
Or even 20, 30?
Sure.
Let's double it. Let's get to 50.
Yeah.
In a lot of ways, I think we're just hitting our stride. I think we've just gotten started. What has really excited me over the years at Calvert is we've turned kind of what was literally a kitchen table business. We ran the office off a kitchen table when I started, to a company that's over 50 people, all who care deeply for this business, who really understand how to do well. We're professionalizing. We're getting better. We've got access to more people who understand their role at a much deeper level than when we had 5 people in the whole company. And so I've just got such an amount of excitement for where we can go, and helping even more people. And there's 2 areas where I've got the most excitement for our future growth. What we've really proved in the last 5 years, particularly, is our investments with real estate investors and how we can leverage them to their best success in helping them out with short-term financing. And we've doubled down on that really big, and it's proving to be very successful. People really like it. And I think we could just do even more. I think we can do even more, not because we just want to grow, but because I want to help more of these people realize these dreams. And I want to help more people get access to taking control of their own financial future, which that's the beauty of real estate, is it's touchable, feelable, and it's very approachable because we all drive down streets and live in homes ourselves. And then the other area that I really have a massive vision for, that I really want to work on achieving in what I have left in my career, which is hopefully another 22 years, would be to help more homeowners with debt consolidations and managing their own personal finances. I've got this great passion for financial literacy, and young in my career, I took it upon myself to really try and help people understand their credit, understand their budget. It wasn't something I needed to do to approve them for the mortgage, but I really didn't want them to leave our door without learning something about how to do it even better going forward. And I think we could just have a massive impact on home ownership in Canada with helping people structure their debt. So that's a passion that I want to unravel and do even more and help even more people in the world.
Love it. So building more relationships, educating more clients, and building a better Canada.
Absolutely.
I think certainly that passion within personal finances shines through. And I think humans are underserved as it relates to understanding the checks and balances of their personal finances, understanding the importance of maintaining credit, understanding the importance of spending less than you earn, and having a plan in turn. It's easier said than done, but certainly I can get behind that passion to help more of our borrowers, and even if they're not our borrowers, more people to be financially successful.
Yeah, amazing. Totally agree, especially for my generation. I find if you don't have a passion in it, kind of goes by the wayside. So making it more accessible and easier to understand with basic rules of thumb. Myself, it's something that interests me a lot. Personal finance, so I gotta have that touch. But similar to your point, it's something that I personally really enjoy chatting outside with my friend group beers. This financial literacy, it doesn't get taught unless mentors, other individuals who are interested in it. So definitely massive.
Yeah, I think partly because it's such a difficult thing to bare your chest and tell people about your own financial situation and then seek help about it. And that's one reason I really believe that mortgage brokers and us as lenders are in an extremely privileged position, right? People kind of expect that they're going to have to tell us their financial history and their story. And so we can ask questions that maybe their mother, their father maybe could get away with asking, but not get an answer out of. Right. And so that's why I think it's such a privileged position for us to teach them a little bit on the way by and help answer their questions and set them up for success. It's one reason why I'm extremely grateful to have the teaching of the mortgage broker industry. It's an industry that Everett joined 50 years ago. He's a pioneer in this area, and I'm so grateful that we're part of that industry and to continue to support it. So I can't suggest high enough that go and get good mortgage brokers surrounded you that you can talk to about good ideas and how to structure your finances, because they can really help people out and they're valued positions in society, I think, and for every real estate investor and homeowner.
Totally. Well, thanks for joining us today, Dale. I know I've learned a lot, and this will be part of a multi-part series celebrating our 50th year anniversary and providing exposure to the experts at Calvert. We'll have more of the founding family on and a lot of others, so that we can share with the community our particular areas of expertise and passion. So thanks again, Dale, for joining us.
Thanks for leading me through the questions. Great chat.
That wraps up another episode of the Real Estate and Wealth Podcast. Be sure to hit that like button, share with fellow real estate enthusiasts, and subscribe to stay in the loop on all upcoming episodes. Get in touch with the team at Calvert Home Mortgage Investment Corporation by calling them at 1-888-752-4642 or email admin@chmic.ca. The opinions expressed in each episode belong to the individuals featured and do not represent the views of Calvert Home Mortgage. While we provide valuable insights, consulting with qualified professionals ensures that your unique financial circumstances are carefully considered, aligning your investments with your long-term objectives. Calvert Home Mortgage Investment Corporation is not a financial advisor, and we cannot advise you on making investments. There are risks to investing in real estate and the potential that you can lose all of your investment.